Welcome to Engine Markets training session. Meanwhile, others are joining in, we can start with our session and talk about what are the expected topic for today. Let's go ahead with our next topic. Just a minute. So today we are going to talk about mutual fund analytics for equity and debt and even hybrid funds as well. How to review mutual funds based on the singular mutual fund analytics, and couple of updates based on the analytics. We are gonna discuss about that, and then we are gonna have a Q&A session where you can question us and we will address them all together. So let me open my terminal up, and I hope my screen is visible to every one of you so that we can start with our session. So if it is not visible, do let me know on chat or via verbally, so we can take some steps on that. So let's start. So as you can see, the terminal is on. Previously we had a session about how we screen funds, multiple categories, funds and equities, and come up with certain particular funds for making model portfolios, right? So in this, way, we are just gonna load in our previous list to see if, those couple of funds we can review based on a singular fund analytics. As you can see, the list is loading here. And then I will just open up the analytics. To open the analytics, all I have to do is just click on those funds. So there are two certain ways to open the analytics of the funds. One is to search the funds from this dialog box. All you have to do is type in the name of the fund, and that's how you can open a fund. Another is to actually click on this, any name of the fund which you want to open up. Let's say we load in Access Mid-Cap Fund, and that will be loaded in another tab altogether. So this is very helpful because if you want to load in multiple funds in multiple tabs, all you have to do is just click on those funds accordingly, and that will open up new tabs altogether in front of your system. Okay, so let's start with one singular analytics of one particular fund in equities. Then we will go ahead with hybrids or debt part as well, to see how to view those particular funds accordingly. So I hope my voice is audible to every one of you, and the screen is visible. So accordingly, as you can see, to review the performance of any fund, we have got the fund performance, and we have couple of funds where you can view the growth in AUM accordingly just by clicking on this button. And another thing is that you can actually review the entire performance statistics just by going into the fund performance. And here we have also given the change benchmark function where you can change the benchmark accordingly. And here, you can look into certain parameters to review what kind of performance this fund has backtested from this particular start date. Now you can change the start date accordingly, but just by clicking on this button. Let's say I'm considering a fact that I want to see from the 5 years this particular performance accordingly, and that's how this fund has backtested based on this particular performance. And here you can see the annual return, annual volatility, risk parameters like Sharpe ratio and Sortino, and you can also see the historical annual value at risk. So I'm repeating this again. I've already discussed this in the previous webinar, that this helps you to gauge what kind of a risk, what is the probability of a risk you're gonna get if you go for such a fund. As an example, let's type this as 99. So this shows you that in the confidence interval of 99, there is a 1% chance, which is 100 minus 99, that this fund can have a drawdown or a loss of negative 46.75%. This is based on the calculation of daily returns, so historical VAR. And for implied, it's based on the calculation of daily volatility. What you have to do is just have to, keep it as 99, and you can see for that particular confidence interval, you can actually see the loss. So I'm just repeating this again. For VAR, normally what we look into is, for the risk, we look into volatility normally, right? But for the downside risk, to look into historical annual VAR would be a better option to see what is the probability of this particular fund to get that particular loss. As a matter of fact, let's take a confidence interval different than 99. Let's say we keep it as 95, there is a 5% probability. The confidence interval is 95, and the probability of the loss is actually negative 23.55%. Now, why this is important, right? Let me show the other terminals as well. Let's say you're comparing three funds. One is PJM India, DSP Small Cap, and the third one is Axis Mid Cap. Now you have a decision making as to which fund is highly risky and which fund is not that risky at all. So you would take a call based on that. So essentially what you can do is you can just take a look into 99 VAR for each funds, right? And then you can take a call that which particular risk is suitable for the client. So accordingly, you can see for Axis Mid Cap, the 99 VAR historical VAR is negative 46.75. For DSP, it's negative 51, and for PJM, it's negative 52. So accordingly, you can take a call that what particular fund is actually suitable for the client's portfolio based on the risk-taking ability of the client, right? So this you can load in multiple funds. As I've shown you, to load the funds, all you have to do is just click on this, and on the name of the funds, and you can load those funds accordingly with a new tab. Okay, so let's go ahead with another performance stats, which is a relative stats. It's against a benchmark, and to change the, as I've clearly shown, is all you have to do is just click on those any benchmark which you would like to have, and then see the performance against it. So based on the previous 5 years, this is what our Axis return over benchmark is, which is a cumulative performance and annual return. The tracking error and info ratio we have given. And the most important thing is the up capture and the down capture ratio. Now the main importance is to see the breakdown of the up captures and the down captures. All you have to do is you have to click on this I button to see what is our performance, the performance of our asset against the benchmark which we have chosen. So as you can see, there's an underperformance in up market, but in the down capture, our performance when we are taking in those losses, it's lesser. So against every single month, you can see the some point of the time we are outperforming, some point of the time we are underperforming, but most of the time in down capture, our outperformance is due to the down capture ratio. So that's how you can take a look into up capture and down capture ratio altogether. And then we have monthly chart and yearly chart as well. It shows you that, let's say you're looking for the last 5 years. So you have got couple of months, right? So these couple of months are 61, as you can see, the number of months. Now you want to take a call as to, how many times of the, frequency the months were up, positive months, that you can actually view into the charts. It's truly useful because if you want to know the monthly breakdown of every single mutual fund, all you have to do is just check the monthly statistics, and there you can get the frequency of the positive months and the negative months as well, as you can clearly count by itself that how many negative months you have. And here you can also see the for the yearly chart as well. So we, in the last four years, as you can see, this is, all the months were positives. So all the years were positive. So that's how you can look towards the performance statistics. And here we have given one of the important thing here is that, let's say you have a hypothetical sense that if you're investing 5 lakh of the corpus, from 2017, that what would have been your, entire, accumulated value. So that's how the fund performance works. Let's go ahead with the asset allocation. So for asset allocation, we have given an overview and a detailed view as well. To check the detailed view, we have given this option to check this out. And here you can just click on those detailed view, like equities. So, how much percentage of the equity this fund holds, reverse repo, fixed deposits, derivatives, you can check all the detailed view. And accordingly for every single type of the fund, right? And you can also check the position changes by month for every single month. So let's say I have a hypothetical analysis to check that what was the position of this particular fund of at 31st October 2021, how the position has changed from the previous month. That you can view accordingly for every single month, right? And here you can also see the position added and the positions removed, positions over time. To check the positions over time, we have given two options to see it by security and by sector. To check it by sector, all you have to do is, this is already unloaded, but to check by securities, all you have to do is just click on this. Now you can check for every single month how the security changes in the percentage from the previous month is going on, right? And the next is the concentration. Now, sometimes the portfolio, as mutual fund is also a portfolio, there is a high concentration towards certain, securities. So if you see that there is, some position, some of the funds which are having a concentration of, let's say, top three concentration of more than 40 or 45, that's a risk, because that top three securities, if they underperform in future, you might have a, underperformance in the fund as well. To check the top three securities, all you have to do is check the overview. You can just click on this show all, and you can see these are the top three securities. And accordingly, you can take a call on other funds as well. Like, let's say we check the top three securities of DSP. All you have to do is, you can see these are the top three. So it includes reverse repo as well, but this is what the top three are. And you can check that altogether here. Now we have also got equity market cap exposure, which shows you, how much percentage of the fund is, allocated towards small caps and mid caps and large cap. If you have some other categorical funds added into the system to check how the caps are, going on for that particular month. And then we have the equity sectors. So accordingly, you can see this equity sectors, the highly allocated sector is the steel, chemicals, and plastic products. Now, if you want to see the exposures towards that particular sector, all you have to do is just click on this. Now, this is truly useful to know the number of stocks in those sectors which are allocated into this particular fund, right? And then we have certain debt. So debt will be, applicable if you load in some debt funds or some hybrid funds. And then we are gonna, look into that later on. Let's go ahead with another set of, analysis, which is a peer group analysis, which is very, very useful if you're looking towards one particular category. That, let's say, if I want to select DSV small cap for my client, I'm ready to, take those risks, and, ready to see that, if this small cap fund is actually, faring well with other funds in the same category and against the SEBI classification average of the small cap fund, how this fund is performing. So based on those, you can see the Sharpe ratio is lesser than the SEBI class average, the TER, and you can also see the volatility. So we are highly volatile than the average in our peer group. That's what we can understand from this. And also you can check it with other funds as well in the entire small cap, classification. So here you can sort in with based on certain parameters, let's say 5 years, to see, how we are faring well against other small caps. That's how it is. And you can download this, into the Excel tab altogether. Now we have one more update which we wanted to release is the fund managers. This update has been released by a couple of days before, and you can check this updates into your system once the webinar is over. As you can see, we have added as the fund managers and their history of the start date and the active status as well. So you can just scroll in, those, particular tab to see if the, how their history has been for that particular fund manager, such as this one and this one as well. So currently for DSP, you can see there are 3 fund managers, and how their status has been from the last couple of years. You can see all the status in front of you. So before, like for an example, we have given one single tab as well. Let's say you want to take a look towards DSP mid cap as well, because this is active for this particular fund manager. All you have to do is just click on this, and a new tab will open up for DSP mid cap. Accordingly, you can also see the fund managers for mid cap as well. So that's how, this new release has been, going ahead from our side. And that is it for the this particular fund analytics altogether. Now there are two couple of parameters to check the overall analysis of any particular fund, because whenever we see the fund performances, it is always a point to point. Today if I change the start date, for a 2-year period, you see the performance altogether. Similarly, if I check for, any fund, let's say we go ahead with Axis mid cap, right? Now, accordingly, if I change the start date, let's say for 6 months or for a year or for 5 years or since inception, the performances are definitely going to change as we have that this time series analysis. To see the overall average of the fund for a period of investment, a rolling analysis is very, very suitable. To check the rolling analysis, you should definitely have since inception to see the entire set of analysis from the start date till current date accordingly. And what you can do here is you can change the period, the rolling period here. So to change that, all you have to do is just, let's say my investment is for 5 years, hypothetically, and I run this. So to explain rolling analysis in a very simple sentences, all I can say is, let's say you have hypothetically started your investments every single day for a 5-year period from the start date of 2011. So what would have been those data points? So every single data point, as you can see here, is the sum of previous 1300 days as I've given here. That is 5 years. So 260 is a working period in a year, that negates Saturdays and Sundays. And that's how you can check this entire data points average in this particular tab. And let's say if I want to annualize this for my 5-year period, all I have to do is click on annualized. Now for an annualized basis, I can definitely see what is my average and what is my volatility of this daily return set of the 1300 days sum. So as you can see how high I have been for an annualized basis and how low I have been. So this is how you can simulate that for every particular point of the time, what could be the the value of your absolute returns accordingly based on the rolling analysis. It's very, very useful because point to point will change, a point to point analysis, and the returns, absolute returns, will change if you change the dates. So rolling analysis gives you a brief idea as to what are you going ahead with. If you want to compare funds based on rolling analysis, all you have to do is just click on this rolling tab into the compare section and compare multiple funds based on the entire sets of analysis. So that's how the rolling analysis works. I can actually check which fund will give me a good average for a 1-year period if I simulate my 1-year returns from the start of 2015 till 2022. So that's how this works out for the rolling analysis. And the one important thing here is that we have also got rolling volatility analysis. So one more update I'm going to talk about is that I'm going to juggle in with another, tab again, is that a rolling volatility analysis, as we have discussed before, is the rolling volatility of any period, whichever you have selected it. So accordingly, you can see how the volatility, which is not static at all, is changing based on every different period of the time you have seen here. So accordingly, in the times of COVID, the volatility has shot up pretty high. That's how you can view the rolling volatility for multiple funds now just by clicking on the statistic. So let me just show this. You can do the rolling volatility analysis of entire sets of funds in one particular sense. All you have to do is you have to click on this risk parameter, which is volatility, and run this. So once you run this, the rolling volatility will work out. So accordingly, it is loading right now. So there are a couple of funds I've added. So, accordingly, you can check the average, which one is having the highest, average wall. That's Nippon India Small Cap Fund, right? As you can see how the volatility has been shooting up from this particular period. And that's where the pandemic hit, right? Let's say you've added some particular funds which are, old enough to show you the crisis, American crisis, but to see how how these funds have been behaving based on the volatility. So you can take a look into some, older funds like, let's say, uh, particularly Kotak Blue Chip, right? For Kotak Blue Chip, if I look into the rolling volatility, let me just check if I can do that since inception. Yeah. So once I load this, right, the rolling analysis shows me the entire sets of volatility which is shooting up. So just give me a moment, everyone. Let me just check the custom date. Yeah. So accordingly, until 2004, from 2004, we can check how the volatility has been changing for Kotak blue chip fund. And then you can actually view this two. There are two scenarios. One is the crisis, which we had in 2008, where the volatility was shooting up truly high here. And there's another one which has, shot up again to truly high. And there were two brief periods where the volatility was shooting up, more. So this rolling volatility is very, very useful. You can do it for multiple sets of periods. So, as you can see, I can just show you the rolling volatility of 780 period as well. And this is for a 3-year period, which is 780 days. And that you can see accordingly for any particular fund and compare it with other funds. So right now, this particular statistic is comparable into this compare section. So that is the new update we have where you can do the rolling volatility analysis. And one more thing which we have released here is the rolling, return upon vol. Also say about risk adjusted return, but you can check what is the return by vol average. So accordingly, you can take a call that are you taking enough, are you getting enough return based on the risk you're taking for that particular securities. So that's how you can take a call. You can see how, Parag Parekh is lesser riskier and giving you more returns against each other. So that's how you can compare multiple funds against each other to see how this particular return by vol has been changing. So that's how this works out for the new updates. Let's load in one, hybrid funds to show you debt portion as well, because that's the portion which we have left out. So let's load in any hybrid fund. So I'm just loading this to show you that you can load in funds from this particular tab as well. To load in this funds, all you have to do is type in the name, and that's how you can load in the fund here. So only thing here is that once you search on the tab, the funds get loaded into the system, but not in another tab altogether. Now here, if you want to see, some of the debt parameters, one of the important parameters you can do is you can just click on this, this particular icon to see the YTM, average maturity, and the duration accordingly for the last couple of months. So you can see accordingly that, every like the yield to maturity, average maturity, and the duration, how it has been changing for the last couple of months. And accordingly, you can also see the asset allocation in the debt side. So you can see all the fund credit ratings and the sectors of the particular securities which this fund is holding. And in the overview as well, you can see the entire debt column. So as you can see, there is equity as well. But to see the entire debt columns, all you have to do is click on the D. You can click on government securities, and you can see all the government securities placed in one single tab. So that's how this works out, and you can actually view the entire debt columns here. And one more important thing is that in the screener itself, we have certain debt columns where you can sort in those columns and use it effectively, just like equity mutual funds, right? So to do that, all you have to do is come into the fund section, and in the screener, there you have to load in the debt columns. To load in the debt columns, all you have to do is click on this debt columns. And here you can see these are the debt columns which we have given here. And accordingly, you can sort in based on those debt columns. So let's say I'm just sorting in, I'm just filtering this categories here for all the debts, right? And once I cancel this up, I can just sort in based on the net YTM. So the net YTM shows you the entire sets of, highest yield to maturity and, till the lowest yield to maturity. You can sort in and choose those funds to add them to the compare section so that you can make, multiple model portfolios based on that. So that's how this works out. So I think I have finished the entire session based on what we had this topic about. So we can start with our Q&A altogether. So any questions?
Hello. Yeah, I have a question. Like with respect to while we are identifying the funds or creating a white level, like what should be the frequency or what should be the duration for which we need to look at all these data in your view?
Yeah, sorry, could you repeat the first part? I understand you're looking what the frequency is. Could you repeat
Yeah,
the first part?
the frequency I'll come later. So normally for what duration we should be looking at these data, like whether it should be 260 days, 720 days or 1000 days
Oh, I see. You mean the rolling window?
rolling returns.
Yeah. Okay. So, generally we have been showing you all the examples with 260, which refers to, generally speaking, 1 year, because that's the number of working days. Now, that's just a standard number we are using to show you. Now, typically, it will depend on the circumstance to quite an extent, because, for example, a lot of time rolling returns could be useful is, let's say one of your clients, they want to put money away for 2 years. And they are looking, say they don't want to, they don't expect to take it out within 2 years. So they kind of want to get an idea of what could happen to my money in about 2 years time, right? So this way, what we are running right now, as you can see on the screen, we are running a rolling analysis of 520 days. So across all these funds, this is the average 2-year return of every 2-year period in the history of this fund, and considered on a daily basis. We have taken every single 2-year period that has happened and given you the average of that. And then other statistics like high will show you the best 2-year period. So they can get an idea that you're not going to double your money. You might get 50% return, but double is not going to happen. So you can set their expectations. For example, low, you can also set their expectations on the downside that, okay, if you get really, really unlucky, you could be down 20-30% in some cases also, right? And also, if you want to think in some just a in the way of probability, you can look at the positive percentage. Look, what kind of chance do I have of making sure I don't lose any money? That looks quite good in these stats. There's a very high 90% chance, more than 90% chance that you will most likely be positive, right? You may not be very positive, maybe very positive. So this kind of helps to set expectations for that time period that you're looking at. So I wouldn't suggest that you stick to one particular time period for everything. I think it will depend on the circumstance and the kind of investment horizon that you are planning for your client.
So when a portfolio is already there, so we can just see the same data for the existing portfolio also?
Yes, of course. So when you go to the portfolio section, you simply run any portfolio. Like, as you can see, Umair is just running one of the portfolios that he has saved. Yeah. This can be a client portfolio also. We will show you that in a second. But it will run in exactly the same way. And when it's finished running, you will be able to look at the backtest of the current holdings, which is what is important. And here, you'll be able to run a rolling analysis on 3 different rolling windows or periods at one time. So in one view, you can see 260, which is kind of 1 year, 520 is about 2 years, 780 is 3 years. So you can see they on average, even over a 3-year period, there are some unlucky periods where you could be down 10%, even after 3 years, right? So, so this gives you a lot of kind of good insights and something to tell your client that, look, these are the kind of expectations you should have. Of how much money will I get in 1 year, how much money will I get in 2 years or 3 years. So this kind of sets the expectations for them, so that this is what has happened in the history so far.
Now this is with regards to the entire portfolio, correct?
Yes. But so right now,
yeah, in the same portfolio, if I want to evaluate each, like suppose I want to exit some particular scheme,
yes,
or I want to bring in some other scheme.
Yes.
So, like, if I need to analyze that, like, are there any parameters?
Yes, of course. Of course. So the step would be as follows. Yeah, while after you've run the portfolio, you can see a compare icon right on the top. When you click that, it will basically take you straight to the compare section. So you can see it has changed you from the portfolio section on the left-hand side to the compare section. And basically what it does is loads all the funds that were there in your portfolio. In this case, there are 15 of them.
Okay, for that I need to click on compare.
Yeah,
right?
compare on the top of the portfolio.
Okay.
Let's bring the portfolio back. There it is. That's the button. It just makes your usage easy, because otherwise you would have had to input these one by one. If you click on it, automatically it will load these into the compare section, right? And once you do that, then you can go to the rolling tab, which is the second tab, and here you can run rolling analysis of all these funds against each other. That way you can find out, you can, let's say, for example, a simple example, you can sort and you see L&T Flexi Cap Fund has the lowest average 520-day return. So you might say, okay, I think I'm going to replace this Flexi Cap Fund with some other Flexi Cap Fund. And if you wanted to do some research on Flexi Cap funds, in the compare section, you could actually load all the Flexi Cap funds in one go. So over there, add groups, Flexi Cap Fund, there are 31 Flexi Cap funds here. So just click on it, Umer. And so as it's, you can clear. Otherwise it will become too big. Now, because we've already decided we are replacing a Flexi Cap fund, now what I'm doing is I'm actually loading in all the Flexi Cap funds in this view. And from here, I might choose a better Flexi Cap fund to replace that old one with, right? So here I can, again, once this is finished calculating, I can go to the rolling section, and there's quite a few funds here. So I can. So here basically, I think he's got some old funds still here. So okay, so what Umer is doing is he's removing some of the older funds. Actually, Umer, you can let it be, because the rolling analysis now also takes care of old funds. So let's go to the rolling section, and we can just simply move the start date back. So just move the start date back. Take a longer period of time. Change that. Okay, so what you'll see here is the results coming in for all these funds, and also whichever fund does not have enough data, you'll just see a dash. And from here, that L&T Flexi Cap fund that we were looking at, so it must be here somewhere. There it is. I think that's not. So that's 1065. So why not choose a better Flexi Cap fund? So let's sort with the average and see what a couple of good Flexi Cap funds look like. So on the basis of this statistic, which is the average 520-day rolling return, you could pick one of Parag Parikh or SBI or Mire Asset, Quant Flexi. These have much better rolling returns. And this is over quite a long period of time. You can see from 2014 to 2022. So you can choose, any of these guys and replace it with that.
Got it. Thank you.
No problem. I believe somebody has asked for what the pricing is. Sir, I think someone from Anirudh's team will just be in touch with you. If you could just maybe give your number, or someone from the team, can you just put your number on the chat so Mr. Ramanujan can contact them?
Normally, there is a lot of discussion with regards to the top quartile performance and all those things.
Sure.
So in this our particular portal, is there any option of seeing like which were the schemes which were in particular section, in which were the ones in the top quartile for last 6 years, 7 years, 10 years?
So we generally don't like to use the quartile method. The reason for that is, why quartile? Why not top third? Why not top 10%? Why not top 20%? Right? Exactly. What is so special about a quarter? Right? So it is just a method people have used to simplify things, but there is no special thing about being the top quarter. I mean, top quarter is as good as top 20%. It's only 5% different. So the thing is, at the end of the day, we show you a sorting method where you can just easily sort, and you can decide for yourself if the top 5 are important, top 10 are important, top quartile is important, top whatever is important. So that is up to the user. We give you the data in a simple sorting method. Even when you go to the screener, you can just sort in 1 second all of these stats. Sorry, while we're doing this, there's another question saying, I'm doing simultaneously rolling returns, does not show beyond 14th January 2022. Umair, if you could just come back, could be that one of the funds has some the end date. There's an end date. Okay, so it stopped at 30th June, sir. It should be. Just look at the chart. Just look at the chart. Just hover over the chart right at the end. What about the end date? 30th June, sir. So we can, Mr. Dalal, we can check with you separately, but it looks like it's showing for until yesterday. So yeah. Any other questions from anyone?
Yes, sir. I have a doubt, sir. Sir, in annual war, that is 95% or 99%, you have to mention in the section. What percentage, sir? That is, if 99%, that is 100 minus 99 is 1% downside. The fund will produce some negative percentage. What it means, sir? That is.
You mean what should you use? The industry, see, the industry standard is 95. That is the typical VAR that everybody uses. I think the ideal case is it doesn't matter that much if you use 95, 96, 97. The point here is that you should compare with other funds using the same VAR. That's the main thing. And just so we understand what this really means, 95 means that 5 times out of 100, this fund will lose at least 21%. And when I say 5 times of 100, it means, talking about probability, it means in 100 realities, 5 realities, this fund is going to go down. How do we come up with that? We look at the historical returns. So 5% of the time, this fund was actually, was creating returns that could cause that loss. So this gives you a good idea of what is the chance of what kind of loss is there a 5% chance of happening. So it's a very useful number to compare.
Really?
And this is used by a lot of most trading desks, most fund managers. Everybody will. I can guarantee all the fund managers of all the AMCs, they will be checking their VAR every single day. Every single day they'll be checking their VAR.
Okay. Okay, sir. Not understanding much more clearly.
Yes, great. Are there any other questions?
Why did you not get the historical war column in the compare sessions?
Umair Jessesko, I thought
Yes,
it was already there. Compare section. Is there a VAR column in there? If it's not,
no, it isn't.
Okay, it is not. Okay, so we will definitely write this down. I'm just putting it into the list. We will definitely get this out in one of the next releases.
It was necessary here.
Yes, definitely, sir. I agree. After standard deviation and sharp, we will put the VAR column.
Okay.
On further note, sir, we do have a VAR in screener tab as well. So if you look into the risk column, there we have historical and implied VAR, both of them added. So if you want to sort in sort in based on the VAR of the funds, you can do it from here as well. So are there any other questions?
Okay, Umer, I think now we can close.
Sure. So thank you so much, everyone, for joining this session. We will definitely come up with a new topic in the next webinar. So please join that session as well, and have a nice weekend. Tentatively, same time, we are going to have the next webinar as well on Friday, 4 o'clock. So thank you, everyone.